Before the break, we looked at background in terms of theory. Now we're going to be looking at more detail relating to the actual accounts, okay, in terms of how do we do certain things. So again, 3 questions here. What is financial position? How can we measure it? Okay, and when do we measure it? So 3 questions for you guys to answer in terms of revision, things that we need from our previous module that we're going to be using again in this module. Okay, so take 3 minutes and answer those 3 questions, and then we'll discuss it.
Perfect.
How are you guys doing? Are you right?
Yeah, we finished.
Okay, perfect. So let's start with the first question. What is financial position?
I said the status of the assets, liabilities, and owner's equity of an organization reflected in the financial statements.
Okay, good. So yes, it's a separate statement, and the focus is on assets and liabilities. Nice. How do we measure it?
A balance sheet.
Good. Okay, and also what?
Oh God. Statements.
Okay, the how is looking at the quantity, the amount, quantifying the actual asset or liabilities. How do we know how much an asset is?
I don't know.
Okay, so there's a few different ways we can do it. What about fair value?
Okay.
Okay, what about current value? Market value.
Okay.
Market value. Right, in a later module, you'll even look at NRV, net realizable value. Okay, or inventory. What about costs? Okay, so do you agree? Let's just take one example. Financial position is dependent on your assets and liabilities, yes?
Yes.
Great. Okay, so if I'm looking at an asset, let's take inventory as an asset.
Okay.
If I'm buying computers to sell, okay, when I buy the computer, what is the price going to be called?
It's going to be the cost.
Exactly. But if I've got a computer that I've bought, that's the cost, and now I'm going to be selling it.
Yeah.
What are we going to call that price?
The selling price.
The selling price. So you've got 2 different ways of measuring it. Do you agree? Yeah. I can measure the computer at the cost price, or I can measure the computer at the selling price. But now, what happens if this is an old computer? So I bought this computer 2 years ago, and I'm trying to sell it. Do you think I'll be able to sell it at the cost price?
No, it will have to be at the depreciated price.
Correct. There could be a depreciated amount in terms of a carrying value. So that's something else I can add here. Carrying value.
Can you please share the screen?
Sorry about that.
No, sure.
There we go. Alright, so cost, carrying value, fair value, net realizable value, current value, market value. Those are all different ways of measuring what?
The assets and liabilities.
The assets and liabilities. Okay, so depending on what I've got, I'm going to use that to measure my assets or my liabilities. Okay, is that all right in terms of the how do we measure?
Yeah.
Okay, and when do we measure? Obviously, this is going to be at one point in time. Why at one point in time and not over time?
Because the prices are going to change. The cost is going to change because of depreciation over time.
Correct. Okay, so I have to look at something at a point in time, because if I look at the value at the beginning of the year versus the value at the end of the year, those amounts could be very different.
Yeah.
Okay, so that's key, and that's why when you look at financial position, you could literally do it every single day by day, month by month, year by year. It doesn't matter as long as you're looking at what? 1 point in time. Okay, is that alright?
Yes.
Yeah.
Okay, so now on the next bit, we're looking at the financial position. So if I'm looking at financial position, we just spoke about A and L. Those are important. But if I look at the difference between A and L, what do I get?
The owner's equity.
Correct. And who is entitled to that?
Owner.
Exactly. So do you agree, when looking at their financial position, do you agree the statement that we've got is broken up into what? Assets and liabilities, but you also see what on the statement?
The profit and loss.
No, you don't see the profit and loss. You also see the owner's equity.
Okay, the capital
Okay,
control.
because remember, if I think back to FAC1601,
Yeah.
if you look at the structure, you had assets, then you had non-current and current, right?
Yeah.
And then you had a total.
Yeah.
And then you had equity with a total. And then you had liabilities with non-current and current, and then you had a total, right?
Yeah.
Okay, and that's your very basic format for what? The financial position.
Yeah.
So even though you're focusing on A and L, you still need to think about the OE, because who's entitled to the owner's equity?
The owner.
Exactly, the owner. So we need to be mindful at different points in time, you'll have a different amount of assets and liabilities, and it's always attributable to the owner.
Yeah.
That's very important to remember, because when we look at the first bit of information related to partnerships, that's the first new module that you'll see in terms of theory. Okay, so new theory in this in the 1601 is partnerships, and it gets covered over 3 separate units, so it's quite a big section, and it always comes up. And the biggest, let's say, problem area that I've identified that students struggle with is this whole idea of owner's equity and what does it actually comprise of. So there are 2 different equations for owner's equity. The one is A minus L. Do you agree?
Plus OE, yeah.
What is the other?
L.
No, OE. OE equals what? So I've got 2. I've got OE equals A minus L. And what is OE also equal to?
Profit minus loss.
Almost.
Income minus
The
expenses.
clues are here.
Income.
Capital is what I give the business, right? So if I give capital to the business, what happens to owner's equity?
It increases.
It goes up.
Yeah.
If I earn income, what happens to owner's equity?
Goes down.
Income.
No, income also increases. It goes up.
It'll also increase it, correct. So capital plus minus the profit or the loss,
Okay.
and then plus or minus drawings.
Minus.
Correct, because that takes away from the drawings. All right, so you'll see that equation later as well. We'll recap it, but I'm just trying to put it here because, as I said, when you change the number of owners, you need to remember that it doesn't matter if I have 1 owner, if I have 2, 3, 4, if I have 100 different owners, it's irrelevant. The point is you have assets, you have liabilities, and the owners are entitled to it. Okay, so just think about owner's equity as an amount that you're entitled to as the owner.
Yeah.
That's it. Okay, don't overcomplicate it. Just think of it as, what is the business actually worth to the owners? And the answer to that question is the owner's equity. And the owner's equity can be calculated using different calculations. The 2 that we've looked at before, that we'll look at and we'll use again this semester, is the A minus L, and then the capital plus or minus the profit or loss minus the drawings. Okay, so those are the 2 equations that we can use in order to determine the actual equity, the actual worth that the owners have.
Okay.
So your definitions, I'm hoping you're still familiar with these in terms of the background. Again, you aren't going to be given this in your textbooks or your study guides. Okay, so you're not going to see them describing an asset, describing a liability, because all of this they're assuming you already know because you've passed 1502. But you do still need to know it, so that's why I'm revising it in the first week. So we've covered the important bits and pieces, and then we can build on what we've covered so far. Okay, so What I've got here is purely information, things that you already know. Most important is the disclosure, because everything is going to be about the way we present information. So if I've got an asset, what types of assets can I get?
You get current and non-current.
Correct. See, that's good because that's disclosure.
Yeah.
I get two types. I get short-term and I get long-term assets. Does the same thing apply to liabilities?
Yes.
Correct. Okay, so again, non-current liabilities
And current.
and current liabilities. So always focus on disclosure. You know how to identify an asset because you know what the definition is. A resource controlled by the entity from a past event that will lead to future economic benefit. Where does that come from? The rule book, IFRS. Liabilities, obligation is key. Okay, that's the key word you're considering. Is it an obligation or is it a resource? That determines if it's an asset or a liability. Okay, the one leads to an inflow, the one leads to an outflow.
Perfect.
Alright, so here's the slide about long-term and short-term again. You've already given this to me, so that's good. You remember the basics. Non-current is?
Long-term.
So if it's long-term, how do I determine if something is long-term? Greater than 12?
And if it's over greater than 12 months.
Correct, greater than 12 months. And short-term?
Less than 12 months.
Correct. Less than 12. So how is that important from our point of view in terms of the tests and exams? If I'm looking at greater than 12 months and less than 12 months, how am I going to do that practically?
Well, you can see the financial period.
Yes, so I need to draw a timeline.
Timeline, yeah.
Okay, so when looking at tests and exams, you're going to have to draw up a timeline. You're going to have to show yourself or the examiner as a working. Okay, remember, they're never ever going to mark the timeline in terms of giving you actual marks for it, but it'll be part of your workings to get the correct answer. Okay,
Yeah.
that could be part of a depreciation question.
Like last.
Pardon?
Yeah. Like last test, they asked that in the exam.
Okay, so they asked you for what? Disclosure relating to what type of account?
Yeah, and you had to do a timeline.
Oh, you had to do a timeline even. Okay, great. So they've actually focused on it a lot more then. It's always something that you have to use. It's a tool that helps us with the workings.
Yeah.
Here we've got the basic accounting equations. We've got two. I want the missing one. Which one is missing here?
The one we just did, where owner's equity equals capital plus minus profit over loss or profit loss, and then minus drawings.
Okay, not quite, because that's another equation for owner's equity. Here I've got two equations.
Okay.
The L. What is the L equal to?
Assets minus owner's equity.
Assets minus owner's equity.
Yeah. Or is it plus? Oh, okay.
That's right.
Okay, just
L would be assets minus owner's equity. Okay, correct. Because you're taking the L to that side, take that to that side, that would be correct. Yeah. So those are the three different equations that we could use. Why is that equation important?
Because I might ask you how to work out the liability.
Correct. If you have missing information. So in 1502, one of the study units that you had to cover was incomplete records. If something is incomplete, how do I find the missing figure?
Yeah, to use the formulas.
I have to use the accounting equation. Exactly. Good. Okay, so this is how I'm going to be using this in terms of the basic accounting equation. It's going to be a tool that can help me find what? Missing figures, missing amounts. Sometimes you might have a question where they don't give you all the information, but they give you enough information to calculate something that's missing.
Yeah.
So if I have a question like that, first thing I need to think about is the accounting equation. That's the best tool that will help you with the actual working.
Yeah.
Great. Double entry rule we're familiar with. Every debit must have a credit.
Credits.
So here's a template, very basic in terms of the statement of financial position. What I've tried to emphasize here is this: the assets and liabilities, and then this is summarized. Where's the detail? The detail is there in the SOC. That's where you find the detail. Do you agree?
Yes.
Right, so if I'm going to look at detail in the statement of changes in equity, what detail will I see here in the statement of financial position? Will there be any detail for any of the accounts?
Isn't it for the expenses? No.
You said expenses.
Statement comprehensive.
Yeah, that's comprehensive income.
Yeah.
What
so it's
detail will I see here?
Won't it be that income and capital?
No, there's no income. There's no capital on the statement of financial position. What detail will I see here?
Assets and liabilities.
Okay, so I'll see specific assets and specific liabilities. If I don't, where will I see the detail?
It's a statement of other. I know exactly what it is.
It's the notes.
Yeah.
Okay, so that's detail. So if I'm looking at the statement of financial position, I'm going to see assets, I'm going to see liabilities. I'm either going to see the specific asset and the specific liabilities in detail on the actual face of the statement, or if I don't, I will find that information in the notes.
Yeah.
So if I look at one example, non-current, do you agree we get PPE? Is PPE a note?
Yes.
Yes, so this would be note number 1. Then in the notes, I will see all the detail that relates to all of the assets under property, plant and equipment. Is that alright?
Yes, it is.
Okay, so from an exam point of view, remember, questions are going to be asked separately. You're never ever going to get a question where you're going to have to draw up all 4 statements. You're only going to have to draw 1 or 2 depending on how long the question is. So the focus is going to be on what is disclosed. So if they're asking you to disclose this, what accounts must I be focusing on?
The assets and liabilities.
Yes, and that's it. Don't worry about anything else because none of the other accounts are important for this particular application.
Yeah.
Alright, so that's key. And you'll see when we do past papers, when we do assignments, the technique is actually more important. Why? Because I'm sure you guys have had experience where you've written the accounting papers for the other module, and you probably always have a scenario where you feel like you ran out of time or you just never had enough time and you wanted to do a little bit more. And that's always something that will stay with you with different accounting modules. As you go further in terms of 2nd, 3rd, 4th year and so on, you'll always find that you're just short of time or there's always something more that you could do. And the thing is, there's always something more that you can do. But you need to do as much as you can under the time that you have. So the exam is only 2 hours. You need to try and prepare a solution that's going to get you the most marks in those 2 hours. And that's why I'm trying to focus and emphasize that now. So when we do look at the examples, you're already practicing that. Okay, so if the question asks you about this statement, first thing that must pop to mind is assets and liabilities. That's it. I need to be mindful of equity, but I'm not disclosing detail for equity because equity goes somewhere else. That goes to the statement of comprehensive income. Changes in equity. SOC.
Yeah.
Okay. Right, financial performance. Again, 3 questions for you to consider. Right, so I'm going to give you some time, and then just tell me when you're finished, and then we'll start going through the answers. Okay.
Okay, perfect.
All right, so let's start with what is financial performance. What did you guys say?
I said refers to the act of performing financial activity for the business.
Okay, good. So what is the financial activity?
It's the accounts and the income and the profit and loss.
Okay, there we go. Okay, that's great because you've expanded on profit and loss.
Loss.
Okay, so performance is going to be based on the actual operation. So think about performance. So I don't know if you guys watched the Aussie Open.
No.
Okay, the finals were this weekend. So you obviously had the Williams sisters playing each other, and then you had Nadal and Federer playing each other in the finals. So in terms of the Australian Open, if we take that as an example, and we're looking at performance, do we measure the player's performance based on their service?
For that game, yes.
Well, remember, they're going to be serving not only once, but they're going to be serving every time they start the actual point.
Yeah. So it's going to be over a period of time.
Exactly. That's the point I'm trying to make. Yeah. So when we look at performance, it can be any performance. I'm just using tennis as an example. So if I'm a tennis player, if I serve and the ball goes out, that's not a measure of poor performance, because sometimes the ball is going to go out. Okay,
Yeah.
so if I'm looking at performance, I need to look at all of the serves that I've taken over the entire match, and that could be hundreds of different points. Okay, so when looking at performance from an accounting point of view, performance is going to be measured by profit or loss. And profit or loss is income minus expenses. Okay, so I'm not looking at one sale or one expense. I'm looking at all the income and all the expenses. And that determines if there's good or bad performance.
Yes.
So how do we measure it?
I said liquidity ratios, efficiency ratios, business statements, financial ratios.
Okay, that's getting more advanced in terms of the actual analysis. If I'm looking at the how do we measure it, I'm looking at this, the I and the E. So how do I measure an income and how do I measure an expense? What do you think?
Financial statements.
Financial statements, not quite. How? How do I measure it?
Disclosure.
How do I measure an income?
Over a period of time. So you have to check your profit and loss.
Okay, that's more the what. So if I look at a sale, let's talk about a sale. Okay, simple example, a sale. How am I going to measure that sale?
How many times you've sold it, or how many times you've sold a product or service.
Okay, yeah, that's good. That's getting to the right answer in terms of, if I think about income, right? Okay, so if I sell something on credit, have I made a sale?
No.
If I sell something on credit?
Yes, you have made a sale, but the money hasn't reflected because it's still owing.
Okay, see, now you're getting to the actual core point in terms of the how. So now we're debating, if it's a credit sale, is it a sale? Yes or no?
No.
Okay,
to me,
it is a sale, but have you received the cash?
It's outstanding.
It's outstanding. So that becomes accrual versus
prepaid.
Cash.
No. Okay.
Okay, so you get two types of basis, an accrual basis and a cash basis. Okay, so if I'm looking at an accrual and a cash basis, the one looks at when do I earn the income versus when do I receive the cash.
Okay.
So, if I sell on credit, have I made a sale? Is there income?
Yes. Well,
yes, there is. Okay, there is income because you've sold something. Whether it's for cash or credit, there's still a sale. Do you agree?
Yeah.
So what happens if I sell on for cash?
It's a.
Is it still a sale?
Yes, it is.
Is it still income?
Yes.
Okay, so it doesn't matter whether it's accrual or cash. It's just the basis that I'm using to measure something. Okay, so I either measure something according to accruals or I measure something according to cash. So if I'm looking at cash, that's more your cash flow. If I'm looking at accrual, that's your accounting. So that's the big difference between the cash flow statement and the statement of, let's say, financial position, or the statement of comprehensive income. They use a different basis for measurements, either accrual versus cash.
Okay.
Okay, let's talk about expenses. Do I record an expense when I incur it, or do I record an expense when I pay it?
It's still going to be incurred because you're obliged to pay for it, so it's still owing.
Correct. Good. That's 100% right. So if I incur an expense, there's an expense. It makes the difference if I paid it or not, because then that looks at the cash flow.
Yeah.
Right. That's an important concept to understand because, as I said, later on when we look at the cash flow statement, we try overcomplicate it because we're thinking about the accruals when we shouldn't be. We should just be thinking about, did I pay it or did I receive it? That's it. Yeah. So the accountants try overcomplicate it because they're looking at the accrual in terms of when do you earn income and when do you incur expenses.
Okay.
So just be careful with that. Right. It's important for later, more so later than it is now. Now we're just discussing the revision in terms of performance. So performance is important to measure. It's measured by profit or loss. How do we measure it? Either accrual or cash. When do we measure it?
Year end.
No, you gave the answer earlier.
So after the sale, once the income has reflected or been paid.
That's only for one sale. What about all others?
So month end.
So over the month or over the year, right?
Yeah.
So when do we measure it? Over a period. It doesn't matter how long the period is.
Okay.
So I can measure the sales for the day. I can measure the sales for the month. I can measure sales for the week. But it's always going to be over a period.
Okay.
So how do we know what income is and how do we know what an expense is? Definitions are key. These are definitions you've seen before. Just to revise, income increases economic benefit, and expense the opposite, decreases the economic benefit. So if I'm looking at disclosure, do I get different types of income?
Yes.
Yes. Okay, I can get sales, I can have service fees that I've received, I can have rent income, interest income. There's such a lot. Same thing for expenses. I can have stationery, I can have packing material, I can have cost of sales. Those are all different expenses. Expenses lead to a decrease in benefit, income leads to an increase in benefit. The one generally arises from an asset, the other generally arises from a liability. So the disclosure is easier for income and expenses because do I get non-current income and non-current expenses?
No.
No, you don't. Income is income, expenses are expenses. There's no differentiation in terms of time.
Yeah.
Much easier to disclose compared to an asset or a liability, where you do need to make the distinction between long-term and short-term. For income and expenses, it's just performance. So did I sell something? Did I pay something? Okay, in terms of what came in and what must go out.
Yeah.
Again, template for the statement, very basic though. We'll look at templates again later on when we actually start doing some examples. Just important to note here is the difference between profits that we get. Okay, so I can have a gross profit, I can have a net profit. It's all the same thing. It's income minus expenses, but I'm either using more income or less income, or I'm using more expenses or less expenses.
Yeah.
Okay, so if I'm looking at gross profit, how do I calculate gross profit?
Isn't it income minus expenses?
What income? Gross profit.
Gross income.
No, gross profit is?
Income minus expenses.
Sales minus cost of sales.
Okay.
But remember, sales is the income, cost of sales is the expense. So yes, income minus expenses is a very, very general formula for working out any profit.
Yeah.
If I'm working out the gross profit, I need to be specific. What income do I use?
Okay. So it's sales minus cost of sales.
Yeah, so the income is sales. What expense do I use?
Other income minus other expenses.
No, for gross profit. I use the cost of sales.
Okay.
Okay, so just to recap one more time. Okay, remember profit. The general formula for profit is income minus expenses. Do you agree?
Yeah. Yeah.
Now we get different types of profit. You get gross profit, net profit, operating profit, all of those different profits. So if I just look at gross profit, then I need to determine what income, sales, what expense, cost of sales. So if I take the income being sales minus the cost of sales being the expense, I get the profit being the gross profit.
Okay.
Okay. Then if you take other income and other expenses into consideration, I'm then going to get the net profit or loss for the year, which we can even call the net profit.
Okay.
And that's after other stuff.
But won't you also have to take into consideration tax?
Yes, you would, and that would be right at the bottom. Because, but remember, tax hasn't been something that you've seen before, but in this module you will. We've mentioned it, but you haven't included it.
Yeah, no, you haven't.
Because how does an individual pay tax? In their personal capacity or separate?
Well, it's going to be separate. It depends on what it is. Like companies pay different tax. You pay as you earn. So there's different types of tax brackets.
Correct. Okay, so there you go. You've got the right idea. So if it's a company, the company must pay its own tax. If it's an individual, they don't. They pay tax in their personal capacity.
Yeah.
Right, definitions here for capital and drawings. Capital, manual assets contributed to the business by who?
The owner.
Correct. That's important because owners are going to be affecting their accounts for equity.
Yeah.
Where is the disclosure? In the SOCI. Drawings, the opposite. Money taken by the business for personal use by the owner. And there's the equation we saw earlier. Remember that one I wrote down when we looked at financial performance and profit, and we spoke about equity and who's entitled to it? There's the other equation.
Okay.
So let's add the first one we saw. What's the basic accounting equation?
Owner's equity equals assets minus liabilities.
Okay. And there you go. You've got the two here as well. So when I look at owner's equity actually has two different formulas. The one looks at income, and the one looks at
expenses,
assets and liabilities.
Yeah.
Okay. So there's two. There's this one, and there's that one.
Yeah.
But they both are identical because the owner is still entitled to everything. They're entitled to what the company creates in terms of output. So if the company is operating, they get the output, they get the profits.
Yeah.
But they're also entitled to the actual company in terms of the land and buildings. Do you agree?
Yeah, I do.
Okay. Right, there's the rules again. I can't emphasize how important the rules are. Why do we need rules?
To know if it's a credit or a debit and what side it goes.
Correct. It's to know how to treat the actual transaction. So step number one is always going to be to do what?
To decide which element it is.
Exactly. Great. Okay, so it doesn't matter how easy or difficult the question is, always start with your basics. You can't go wrong with good basics. If you always remember to apply the basics in terms of what am I dealing with, if you can answer that question, you really help yourself in the exam or the assignment, because if you know what you're dealing with, it's easy to then look at, well, do I increase or decrease? Do I debit or do I credit?
Yeah.
Okay, great. Is that alright so far? Happy with those basics?
Very happy.
Okay, so far we've covered what? All the definitions. Why do we need definitions? Helps us to identify accounts.
Yeah.
We'll be using a lot of general ledger T accounts, not in terms of, let's say, a solution. So they won't ask you to really draw up a general ledger, but we'll be using T accounts for the working of certain amounts.
Okay.
So if I have an account, let's call this account bank, just as an example. If this account is bank, will bank have a balance?
Yes.
Good. Where will the balance go?
It'll be on the debit side.
Why?
Because that's a positive, it's a positive side.
Why is it a positive?
Because it's an asset and assets on the debit side.
That's the right answer. Good. Okay, so see, it's always important to identify the element.
Yeah.
We know the bank is an asset, so we know it must have a balance on which side?
On the debit.
Exactly. And if you carry down the balance, it'll go on which side?
The credit side.
No.
On the debit side.
Yeah, still the debit. It'll be brought down and carried down, yeah. Okay, so just some basics. You should be familiar with balancing, taking amounts down to get a closing balance, right?
Yeah.
Great. Okay, so let's test you guys. I've got a trial balance here, but I haven't given you the debits and credits. I want you to tell me where are the balances going to go. So what's the first step?
You have to identify what element it is.
Good. So let's practice the steps. Step
Okay.
1, element. Step 2, what?
Step 2, deciding explain what land and buildings is. So if it's like an asset or liability.
Yeah, the balance. So the balance will go where? Okay, let's do one together. Land and buildings is what?
It's an asset, so it's on the debit side.
Okay. I want you to add more disclosure as something additional here.
Okay.
Land and buildings is what kind of asset?
It's a non-current.
Good. And where do we put non-current assets in terms of disclosure?
Oh gosh. Statement of financial position.
Correct. Perfect. Okay, so I want you to do the same thing for all of them. Okay, so what is it? How do you disclose it? And then obviously the debit and credit. The debit and credit should be the easy bit to do. Okay, if you know what it is, that's the key.
Okay.
Alright, so just take a few minutes. Alright, when you guys are done, let me know and then we'll check it, okay?
Perfect.
Right, great. So, let's check your answers. Trial balance, sales, what is it?
Income, so it goes on the credit side.
Good, so income, credits. Do you get different types of income?
Yes.
Yes, but non-current and current?
No. It's only assets and liabilities.
Correct. Okay, Brogan, bank overdraft.
I said it's a liability.
Which one?
A non-current.
Current.
No, it's going to be a current, yeah.
Why current?
Because you have to pay it within 12 months.
Yes, it's short term.
Yeah.
So where do I disclose it?
It's going to be on the statement of financial position.
Good. Debit or credit?
Credits.
Good. Kirsty, sales, where do I disclose that?
In the SOCI.
Yeah, statement of comprehensive income, yes?
Yeah.
Okay. Stationery, what is that, Kirsty?
An expense, so
Good.
it'll go on the debit side.
Great. And disclosure, where? Statement
In
of?
the comprehensive income.
Comprehensive income again, good. Okay, loan, Brogan?
Isn't that going to be an expense?
No.
Is it a liability? Okay.
Why?
Because you have to pay it back. It's an obligation.
Good. See, you're using those definitions. That's great. Okay, so a loan is an obligation that needs to be paid in the future. So in the future, I'll pay it back. That's an outflow of benefit. Yes, it is a liability. What type of liability?
Is it a non-current liability?
It could be non-current or current. We don't have enough information to determine if it's long-term or short-term.
Yeah.
Where will it be disclosed?
On the statement of financial position.
Correct. And debit or credit?
Credit.
Perfect. Debtors, Kirsty?
That would be debited.
Debited, why?
Because it's an asset.
Good. What type of asset?
It's a current asset.
Good. And where do they go?
The statement of financial position.
100%. Okay, debtors, current asset, statement of financial position, debit. Okay, vehicles.
I said it's an asset. It's a non-current asset, and it's going to be on the statement of financial position, and it's debited.
Perfect. Creditor?
That.
Okay, so
That's
it's going to be
liability.
it's a liability.
Which one?
Current.
Good. Short term?
Yeah, and it's on the statement of financial position.
Good. Just explain to me what a creditor is.
A creditor is someone owing.
Who? You owing them or they owing us?
You owing them.
Exactly. Good. So a creditor is someone who you owe. Okay,
Yeah.
so if a business owes a creditor, it is a liability, right?
Yeah.
And it's short term, statement of
Yeah.
financial position, debit or
That's-
credit.
Credit.
Perfect. And then the last one?
It's income, so it would go on the credit side, and it would go in the statement of comprehensive income.
100%. Great. Okay, so that's good. You see, this is what you'll be getting in tests and exams. All right, you'll be getting a trial balance where you'll have accounts and your job is to find that. Okay, if you can do that for every single account in the trial balance, you'll know exactly where to put all those different accounts.
Yeah.
And that's important. That's what we need to practice doing.
Perfect.
Okay. All right. The adjustments I'm going to leave for Wednesday. Okay. So we've got another session later in the week. Okay.
Yeah.
So we're going to cover the adjustments. Then I'm going to repeat and cover the depreciation again. Okay. So we'll talk about things like depreciation. We'll talk about things like non-financial. Other non-current assets in terms of financial assets. Okay, so you get assets that are non-financial and assets that are financial. So non-financial assets would be something like property, plant, and equipment.
Yeah.
Financial assets would be something like shares,
Yeah. Okay.
right, or loans. Okay, so depending on the question, we'll either have more or less accounts in terms of the assets or liabilities or income or expenses that will be recording in a specific financial statement. Okay, so I'm going to end after this slide. We won't look at the detailed adjustments. What I am going to give you as some, let's say, inverted commas homework is if you can look at the adjustments and try answer the questions as revision. Okay, we've looked at all of them before, but I want to give you some time to think about some of them for next time, so we can discuss them in detail, because I'm going to add an extra level of consideration when we talk about the cash flow as well. All right, because the adjustments come up not only in a disclosure question, but they also come up in cash flow questions. And when students need to identify cash flow versus the accrual, it becomes a bit of a problem. Okay, so all I want you to do for Wednesday is just think about the accruals. Okay, so how you've always done it. So how have I always treated a prepaid expense, or how have I always treated an accrued expense? Okay, that's just the basic accounting. We'll discuss the actual cash flow on Wednesday together, because that's the extra level of understanding that you need when doing a cash flow statement.
Yeah.
Okay.
That's perfect.
All right, so let's just wrap up then with this slide. Okay. How long is the financial reporting year?
It's 12 months.
Good. So if it's 12 months, do transactions always relate to the financial year?
Yes.
Do they always relate?
No.
No.
Can go over, yeah.
Yeah, all right, so transactions can either extend beyond the financial year, or there might be missing transactions in the current financial year. Do you agree?
Yes.
Okay, so do transactions always relate to the financial year? Not always. There can be scenarios where you're going to have to adjust, and that's why we adjust. We adjust because we need to make the 12 months as accurate as possible.
Yeah.
Right, so if I'm adjusting accounts, what must I then do? I need to identify what the account is. Do you agree?
Yes.
Yeah.
How many different accounts do I have?
6.
Which are they?
Assets, liabilities, drawings, capital, income, and expenses.
Good. Okay. And those are the only elements that you can have for classifying your accounts. Right, so again, a general step is to identify the accounting elements, then determine how they're going to be affected. So the how they're going to be affected is going to be what?
Isn't that whether it will be debited or credited?
Yes, okay, so plus or
Minus.
Right, so for an asset, which is more important, the plus or the minus?
The plus.
Correct. And where would the plus be?
The debit side.
Correct. Okay. Liability?
On the credit side, and it's going to be more important on the minus.
Okay, plus minus like that. Good. Drawings?
Plus on the
Debit side.
minus on the credit.
Good. Capital?
It's going to be plus on the credit side and minus on the debit.
Good. Income?
Plus on the debit. No, credit. Credit. Sorry, and then, yeah.
Minus
And
on
then
the debit.
Yeah, and then expenses, it's
Plus on the
debit. Minus on the, yeah.
Alright, so see, that's important. And those are all the basics. And that's the second step. So the second step is how will it be affected? Positively or negatively, increasing or decreasing, depending. And then the last bit is obviously to adjust. And we might have to correct as well. Okay, so you looked at correcting errors very briefly in the first module. They didn't take that too far. They asked you one or two questions about making some adjustments and changes, but it wasn't as detailed as it will be in this module. Okay, so this module, they do test more of the adjustments. They want you to do more in terms of the actual accounting, in terms of processing changes to the actual records before presenting the information. Okay, so as long as you're comfortable with knowing what something is, knowing how is it affected, and then you can deal with the adjustment later. So step 3 and 4 should be easier. Step 1 and 2 is where it can be a little bit tricky.
Yeah.
Okay. Alright, so we're going to start on Wednesday with these slides. Okay, we've got another around 10 or 15 slides left of this set, and that wraps up the first bit in terms of revision. Okay, remember week 1, I just want to get you guys comfortable with those basics again, revising a lot of the concepts that we've covered previously. Okay, so if you've still got your old textbook, keep it. Maybe if you've got some time and you want to do some extra reading, go through some of your 1502 work again, because as I said, none of that comes up in this module, but all of it is tested again. So it's quite a tricky module to get through if your basics aren't too good.
Okay.
Right, so for Wednesday, if you guys can please look at these, okay? So let me just show you how many I've got here. Alright, so we've got prepaid expenses, there's 1, we've got 2, we've got 3, we've got 4, 5, 6, 7. Okay, that's it, we've got 7.
Yeah.
Alright, so on those 7 slides, if you guys can look at the what is the effect, okay, so what accounts are being affected and why. Okay, so all the basic accounting knowledge in terms of accruals. Okay, remember, what we're looking at here is the accrual. We're not looking at the cash, because a prepaid expense is very different in terms of cash flow, in terms of the inflow versus the outflow, rather than the accrual. Okay, so maybe just to discuss the prepaid expense quickly. A prepaid expense is what? Asset, liability?
It's a liability. It's an asset.
Why do you say asset?
Because it's still being paid.
It's still be paid.
Okay, then it's a liability.
It has been paid.
Okay, then it's an asset, because there's no obligation yet to pay it because it's already been paid.
See, that's good. Okay, so prepaid expense, has it or hasn't it been paid?
Has.
It has been paid. So if it has been paid, is there obligation?
No.
Is there a resource?
Yes.
Yes. Okay, so if there's a resource, is it an asset?
Yes.
Good. Okay, so see, that's what you're going to have to be doing with these. Okay, so just some revision. Think about each and every one of them in terms of the what. Okay, what are they? Okay, is it an asset, liability, income, expense, capital, drawing? Okay, which of the 6? And then you need to think about, well, if I know what it is, now how does it affect the actual accounts. So if I know it's a prepaid expense, I know it's an asset. So am I creating an asset?
Yes.
Yes. So if I'm creating an asset, what do I do to the asset? Debit or credit?
Debit.
I debit. Okay, so see, that's the explanation. Okay, so it's all revision. So you guys have 7 to just think about. Okay, for Wednesday, we will discuss and go through all of them in detail. But as I said, I want to try and bring something else into the discussion because it's important when we look at the actual cash flow. Because it's not only the accrual that we need to look at, we also need to consider the cash receipt in terms of, did I have an inflow or did I have a cash payment being an outflow?
Yeah.
Is that all right?
That's perfect.
Okay, great. Okay, so thanks for attending today. We'll recap and continue with this on Wednesday. Okay, we'll go through the rest of the slides. There are 48 slides in total in terms of revision. We've already covered the first 30. Okay, so we're doing well. Right, and then on Wednesday we'll wrap this up in terms of this set of slides, and then we'll start with the theory for the next section. Okay, in terms of the partnerships. That's the new work that will be starting.
Okay, that's perfect.